All right. Good morning, good afternoon, or good evening. Justin Clark here, along with Mr. Paul Sousa. And it is the Crypto Edge podcast, our 8th edition that we've done. And we've got a lot to cover here, Paul, in just a half hour or so, 40 minutes, to really go over what's happening in the world of crypto. A couple of new coin listings. One of them I'm completely embarrassed about, so definitely stick around for that. And then we have a special guest today that we'll be talking to a little bit later. You're going to have to hang on and see who that is. So anyway, Paul, how are you doing today?
I'm doing good.
Yeah, I know. You're figuring out.
I'm doing fantastic. Yes, guys, stick around if you want to hear from our special guest and if you want to know more about embarrassing coin listings. But I think we're just going to jump straight into it because we got a bit of content to cover. I think we're just going to go straight into the news.
Yeah, absolutely. Let's get right into it because there's definitely a lot going on in the world right now. So hold on one second here.
Alrighty, so what's been happening in the news? Look, guys, over the last 2 weeks, there has been a lot of different news that has come to the fore. But I'm going to just pick 3 that are really standing out, and I'm sure that people want to know why Bitcoin is dipping down to 103 from a high of last week of 110. I mean, we're down. I see we made a little bit of a comeback. We were at 103 a little bit earlier today, now sitting at just over 105. So nice little recovery there. It's still a long stretch to get back to where it was. Look, considering that our all-time high was 111. It's not all that far when you think about it in percentage terms, but this is crypto. I was like, it can take an age to sort of climb this big a hurdle sometimes. But what actually caused this massive drawdown in the last couple of days? Well, no surprising, it's the war that's going on between Iran and Israel. Okay, what happened was that there was this massive cascading effect of longs that got shorted, people that thought that we were going to break through 111, 112, 115, 120. They had bet that Bitcoin was going to go up, and they did this on margin. And this is why we at iCoinPRO do not teach margin, because it's not like spot trading where if you get stuck with a coin, your options are to hold on to that coin until it recovers. When you trade margin, if it goes south and you get margin called, you basically lose everything. And if you borrowed to margin trade, you need to pay that back. Okay, and this is where people get burnt. But there were so many longs that were closed, that were liquidated, and then things turned around. Bitcoin made a little bit of a comeback, so all the shorts got liquidated, and then the opposite happened. It just went the other way, and they would it's all over the place at the moment. And what a lot of people do is, in volatile times like this, they tend to step back, assess what's going on. Justin, how have you been handling something like this?
Well, this is honestly the type of stuff that I think we like. Honestly, we like it even a bit more volatile with the way that we trade. But this is just the natural ebb and flow of a market. I mean, we're battling for control between the buyers and the sellers. You can see we're trading this range over 110,000 up to 111,000. So it's just a very natural battle that happens. And eventually one of 2 things happens, Paul. We either run out of buyers and the price goes down, or we run out of sellers and the price goes up. How long that can take? It can take a while. Okay. So these type of undulations can last for some time. The news is affecting all markets. And if you think you know how they're going to respond to different news events, you're kidding yourself, because I'm sure there's some people that feel like this type of activity with the war might cause Bitcoin to go up, which it seemed like it was. And then all of a sudden it's come all the way back down, like you were saying. So again, people get into a position where what happens, I think, over time is, like you were saying, a lot of people start to kind of sit on the sidelines. They start to take their money out of the market. They want to wait and see what's happening. and then they're waiting for a clearer buy or sell signal. Okay, they're sitting on their hands. And then once certain levels get broken, whether it's on the upside or the downside, then all of a sudden the volume happens, which is people taking action and moving. So right now we're just kind of trading in a normal, very normal market movement of, just that battle of the buyers and sellers to see who's going to dominate right now.
All right. So a lot of people are going, yeah, but in times of war and strife, your supposed hard assets are supposed to increase, and gold did, and oil went up as well, about 7%. But Bitcoin took a little bit of a tumble from 110 down to about 103. Now, we have seen black swan events happen in the past where Bitcoin tumbled 20 to 30%. This is a very small bump in the road. So I'm at a point where I don't know if this is legitimizing Bitcoin as a safe haven asset. Some people are saying, no, but it shouldn't have dropped. But it didn't, when you really think about it. I mean, we're talking
Not
about...
very much. No, never.
Honestly, to me, it seems like just another day at the office.
Yeah.
And considering that, I mean, we've seen some massive drawdowns on similar news, and we're talking about the potential of facing World War III here, and Bitcoin, and now is slowly starting to make a recovery. So draw your own conclusions. It is a good sign that both oil and gold went up a little bit, but make of that as you will. So for those of you who want to know why Bitcoin tanked over the last couple of days, basically the war between Iran and Israel is what it is.
Yeah, right. Paul, it's Bitcoin. This volatility is nothing for Bitcoin. I mean, Bitcoin has done this tons of times. It's done much more dramatic drops. I mean, honestly, it's kind of surprising how well it's holding up. But again, none of this is investment advice. But there's definitely. But again, we could be tomorrow. We could lose 100,000, and if it does that, that might get people a little bit more afraid. And markets. One of the weirdest things about markets, Paul, obviously Bitcoin has value, right? It's limited. It's there's just a lot of arguments for the real value of Bitcoin, which is absolutely great. But does that mean it's ready to go to 200,000 tomorrow? Who knows? Okay. Does that mean it might go lower from here? Absolutely it could, because markets are driven by fear and greed. And a lot of times what's happening in a market makes absolutely no sense compared to what the underlying asset is. It's just amazing how that works. And you can be totally right, okay? Like there's a lot of people have been totally right about Bitcoin, feeling like they knew it was going to go up to 100,000 eventually and stuff like that. And because they were trying to predict and trying to time and trying to do this and that, they're all liquidated and completely out of the market right now, okay? So there's, again, two ways to do markets, in my humble opinion, not investment advice. You either find something you believe in, like Paul believes in Bitcoin, and you invest in it over and over and over again over time. You don't care if it goes down 85%, you're going to buy more of it. 90%, you're happy to buy more, and then your time horizon for profit is decades, okay? And you're a patient soul. Or you learn how to trade in a way that is just micro profits, no leverage. Like we teach here, you can do our free boot camp. It takes you 40 minutes. You can, shoot an email to support@iCoinPRO.com or get back with the person who shared this video with you and learn how to compound your money through trading. There's always risk in trading. Please see all the disclaimers, but that's the second way, which we found through our experience to be successful for people. All right, Paul, let's move on and see what other news topics we got here.
Right. Tell me, Justin, have you heard of something called the Genius Act?
No, I have not.
Okay, so this is based around stable coins like USDT and USDC. And guys, this is a massive market. I mean, there's about $250 billion in stable coins at the moment. Biggest holder would be USDT. So what the Genius Act now allows is for companies that have the reserves to create their own stable coins, as long as they're following certain rules and regulations, such as enforcing KYC and AML and all of these things. And this is now it's either already been passed or it's coming to pass. Or I believe the Senate voted on it in favor for the Genius Act. And this will now allow any major company to go out and create their own stable coin. Is this a good thing? That depends. Now, here is how things work around stable coins. One of the rules is that it needs to be backed 1-to-1 with fiat. Okay, so the US dollar or US treasuries or something of actual real value, right? And you might have a company like Amazon. Okay, and now let's just say that they're sitting on $1 billion in cash reserves. They've got $1 billion in the bank. Okay, so now what they do is they go, hey, we want to create our own coin, which will be used on Amazon and all the rest. So they create a coin. Let's just say they call it AMZ. I don't know if something like that exists, but let's just say, okay. Now they create $1 billion worth of AMZ or AMZ, depending on what part of the world you're from. And now they got $2 billion. Okay. And some people see this as, no, but this is a good thing as long as they've got the cash reserves. Well, they've just doubled their money out of thin air. Is this a good thing? Like this cannot, in my opinion, can't be let to run riot. Otherwise, there's going to, it's no different to the Fed just printing trillions of dollars. It's basically the same thing. It's allowing companies to double their money and to say, but we've got $1 billion. Okay. But trust me, that money, even though it's tied up, it can be deployed in other ways as long as they have access to it. And then they got $1 billion worth of a token, which if you look at it, if a bank does this, okay, or some type of financial institution, most of the times they are then going to say, hey, you can trade using our stable coin against anything else that you want. Use it on our platform, so on. Because now all US banks are allowed to operate in the Bitcoin space. They're allowed to hold on behalf of clients. It's basically become a free-for-all, which is what a lot of people wanted, because not only legitimizes Bitcoin and cryptocurrencies, but it basically gives access to everyday people that didn't really worry about wallets and so on in the past. Okay, so on the one side, it's a good thing. On the other side, these platforms, these companies, these banks will eventually start pushing for their clients to use this coin when trading against. And what is one of the biggest things that they're going to trade against? It's going to be Bitcoin. Okay, so if you really want to look at it from a holistic point of view, from someone who is like kind of anti-stable coins and all the rest, it is another way for them to get you to part with your Bitcoin, if you're a holder, by creating a Fugazi coin out of thin air that is backed, yes, 100% backed 1-to-1 to a tangible asset or the US dollar, treasuries, and so on, which will then be used to trade against other assets. I don't know if this is a good thing, okay, but it's happening. It's done. It's been voted on, and we're going to see a lot of banks now issuing their own stable coins. It's the world, but it was eventually going to happen. I mean, we're moving away from paper money.
Yes.
It is going to happen.
We've already moved away from paper money to a large degree.
Justin, a lot of people go, well, they don't really believe that, or whatever the case is. And I can guarantee you that most people, when they transact, okay, it is not in cash. It is all digital money anyway. Right. When you log into your bank and you pay your rent and whatever the case is, or you receive your salary, you're not actually touching physical cash. You're looking at numbers on a screen. It's just entries into a ledger. It means absolutely nothing in the grand scheme of things. It's not physical cash that you're touching. So most people are working with digital money in one form or another anyway. Okay. When was the last time that you went to an ATM and drew money that you actually spent somewhere? For me, I did it because I was in Vegas and I needed cash and so on. But it's not something that I do often. I tap my card wherever I go. We go shopping here, it's tap the card. We don't really use paper money here anymore.
Yep.
Yeah. Right, but moving along, the last thing And this one was actually quite an interesting one, and I'll try and cover this really quickly. But for those of you that have never heard of Pump Fund, this is a platform on the Solana network that would allow absolutely anyone to go out and create their
on crypto. No.
you could go on to Pump Fund and create your own token. You could launch your own coins.
Oh, the insanity that's happened over there is just
right. It did draw a lot of people to Solana, which is why Solana is like heavily liked by a lot of people. I'm not going to even mince words, but Solana's speed is fast. Their transactions are tiny. I mean, it costs you less than a penny for a transaction when compared to Ethereum at one point, which was nearly $300 for a single transaction on Ethereum about 3-4 years ago. A lot of people might remember that. And also when Bitcoin's mempool gets full, then the transactions start going up $10, $12. It does happen. But Solana has always been this low-cost transactional coin. And then Pump Fund came about and allowed people to create all these meme coins. And things just really got out of hand. There were a lot of pump and dump schemes that were going on. Now, what's this news about? Well, they had announced that they were going to be doing a token launch for their own token called Pump. And this we're days out, like it's going to happen in a couple of days' time. I was staying away from it. And bam, they got hit by bans all over X or Twitter. And there's still speculation as to why this happened. And this is actually really big news because it's just ahead of the major launch. They were looking at actually raising $1 billion through this token launch. I mean, that was their goal. That's not small money. And people are speculating as to why it happened. Did it happen because they're being accused of facilitating pump and dumps, or is it because they were using an unauthorized API, or is it because they were using the API in such a way that it was breaking terms and conditions of Twitter? And that's basically they were spamming. They were absolutely spamming Twitter with all these pump and dumps and meme coins and things that were coming out on a daily basis. I mean, it's at one point there were hundreds of new coins being launched every single minute. If you go and have a look at CoinMarketCap right now, it actually kind of gives you an indicator as to how many cryptocurrencies and tokens are out there. Any guesses, Justin, without looking? Any guesses?
I'm going to say 1 million.
1 million. You'd be short 16.2 million. 17.24 million different cryptocurrencies and tokens.
Wow. Boy, talk about.
And those are the ones that make it onto to CoinMarketCap. It's ridiculous. Okay, it honestly is. And I'm like a huge hater, and I won't mind saying it. I hate meme coins. I hate the granddaddy of all meme coins. I know you like to trade it.
Those I will trade.
Okay, but anyway, guys, that's it in news. But I think time to introduce our featured special guest, who I'm going to be asking.
Actually, before that, I got a coin listing I want.
Oh, right. Do your coin listings, and then we'll bring out our special guest.
All right, hold on. All right. Well, if you hung out long enough, you get to hear what this embarrassing coin listing is. And I can't even believe it. I'm talking about this, but Coinbase made a decision to list Fartcoin this week. And I love Coinbase, okay? Listen, it's a great place to trade everything. They are just seeing meme coins as their bread and butter right now. They are listing every meme coin that's sizable. Fartcoin, I can't even believe I'm even saying that this is happening, but they listed Fartcoin. Binance has not even listed Fartcoin, okay? So Coinbase is like, I don't know what's going on, but that's what they've done. They've decided that was the best new coin that they can possibly list right now. And what's even crazier, Paul, that thing is moving over $50 million in 24-hour volume right now on Coinbase. I mean, it is tradable with our system, but investing in it, I can't even think about who would even put money in this as a serious investment. Again, this is not investment advice. Maybe it's the best move you'll ever make. Okay. A little tough to explain to your tax account, but anyway, we don't even have to go there. But there's plenty of memes on x.com of, trying to explain to your tax account these bizarre meme coins that you made, tons of money on. But the thing about Farcoin is, I printed this up from CoinMarketCap. It has no description. Okay. Normally coins, when they list, they're going to have something that just tries to sell people, right, on why you're supposed to buy this coin. What's the roadmap? What's the plan? What's the anything? Farcoin, absolutely nothing, Paul. Absolutely nothing. And it's trading $50 million in 24-hour volume. It is the 59th coin in crypto. 59th largest coin in crypto. Has a market cap. Let me see here. Total supply, market cap, circulating max supply. Oh, do I have the market cap on here? Yes. $1.3 billion market cap, Farcoin. If that's not end times, I don't know what it is, dude.
Guess where Farcoin was launched?
Probably Pump Fund. Yep. So anyway, listen, there are people in cages, saying they're not going to let themselves out of their cages. There are people threatening to eat their own feces, I believe, on Pump Fund. Yeah. They don't get to a certain amount. Listen, there's just been absolute madness that has gone on over there at Pump Fund. So, yeah, I don't know, man. But, yep, that's the coin listing for this week. All right, let's get to our special.
Can you remember, before we do, can you remember the troll box on Poloniex?
So
Pump Fund is just a bigger troll box.
Yes, I can believe it.
It's ridiculous.
Madness over there.
Yeah.
Right. I don't know what that means for society, that's where, billions of dollars are moving, but let's just not.
I know. And the funny thing is that there was a tweet that some guy put out a couple of years ago saying he may as well just put his money into something called Fartcoin, and it didn't exist at the time.
Yes. And now it does. And it's trading. It's on freaking Coinbase, $50 million.
That's insane. Fartcoin,
$1.3 billion market cap. It just makes no sense. All right, let's get into our guest of the week, Paul.
And our guest of the week is Mr. Justin Clark.
Well, it's funny. You asked me to do this, and I'm like, yeah, absolutely. I'd love to do it. I'd love to talk about trading.
Yeah. So there was a reason why I wanted to actually interview Justin, and it's because there's a lot of thoughts that people have when it comes to trading, or like the life of trading and so on. Something weird happened to my screen there. Oh, there we go. I'm back. And I thought, what a good opportunity to grab onto, where I would interview Justin and I'd throw him some of the common questions that come out. And so I'm just going to jump straight into them, and hopefully a lot of people can actually learn a few things, not only just about Justin, but what we do at iCoinPRO, kind of like what happened in the beginning, how things evolved, and so on. So, you ready, Justin?
I am ready.
Right. So let's take it back to the beginning. What inspired you to create the micro-profit system, and what was the aha moment that made you realize that it could actually work?
So it's funny. What inspired me to get into trading and create this system were two different things. It was fear and laziness. Okay. And the fear came out from the fact that it was 2017 in crypto. We didn't know what was really going to happen. There was China talking about banning Bitcoin and all coins. There was U.S. Uncertainty about it. I mean, it felt like at any moment, this whole industry could have disappeared. And it was not like today. You've got the government's starting Bitcoin reserves and cryptocurrency reserves. So, there's just a lot of certainty around the industry as a whole. But back then it was just, we didn't know. And so I have a natural aversion to risk in my life. And that's, I guess, how I've been able to be an entrepreneur for 25 years successfully, full time. Succeed and continue to prosper and not end up, falling into some of the pitfalls that I think a lot of people who get into network marketing or affiliate marketing or trading fall into, where they make a lot of money and then they, spend it all. I've always been somebody who's been very risk averse, trying to save, trying to think, make hay while the sun's shining and save for a rainy day. So I think that affected my viewpoint of crypto right from the beginning. Is I viewed it as very volatile and very risky, but I saw that there was a huge opportunity there through that volatility if somehow I could master it, right? And figure out how to predict on a small level, when those trends were going to shift, right, from down to up, etc. So fear was definitely a driving factor. I was afraid of losing money by investing. I was afraid of where crypto might be. And it appealed to me, this concept of just small profits and compounding my money. The other thing is I'm inherently lazy. And it's funny, Paul's worked with me for years and he's like, what are you even talking about? I have this thing where I want to make as much money as possible with the least amount of time put into it and the least amount of effort. I think, Paul, you're a little bit that way too. So we both look for ways that we can maximize our returns for the amount of time that we're putting in. I like to spend a lot of time with my family and at the beach, doing fun things like this morning out watching Noah absolutely crush it this morning on the soccer field at his summer camp. He's
meeting me at the morning market.
Absolutely. It's sweating my brains out there in the Florida heat. These are the type of things that I want to do with my life. I love to work, but I like to be efficient, and I like to have a lot of free time and try to make as much money as I possibly can, as quickly as I can, and then get back to living my life. And that's one thing I think people don't understand about trading. Trading, honestly, the lazier you are with trading, probably the more you'll make long term, versus people who want to be really active in trading tend to lose money long term because they're just too much in the market. So with this system, what's great about it is I don't even have to think about the market until my phone shoots me a message and says, hey, there's a trade happening. So definitely laziness and fear are what made this happen. And the aha moment was just seeing that volatility. And I'm like, wow, man, if we could just make a 1% profit here and do it again and then do it again and that was the moment where it kind of came through.
Right. I do want to touch on something that you said, and it's the laziness part. And lazy is a kind of a weird word because you and I are a lot alike where this is concerned. Mm-hmm. We both have very good work ethics. I'm not trying to blow my own horn here, but I'm not afraid to get work done. And you exactly the same. Okay, so you don't have an aversion to work. You've just got an aversion to working stupidly. Exactly. So basically, figuring out ways to compound your time is the best way forward. But anyway, right, let's move on to question 2. What do you think separates someone who struggles with trading from someone who succeeds using the NPS?
Again, I think it's just practice. Really, is a large part of it. It's just doing it over and over and over again, and it's interacting with the community. If you are going to learn how to trade with this system, you've got to post your trades in our forum. Let me pick it apart. Let the other traders pick it apart. You will learn more in posting a couple trades than anywhere else, because the guys who have been around, who have done this for a long time, that have the full body of knowledge, right, of the micro profit system, they're going to be able to point out a couple things. And once that happens, you're going to have that light bulb moment. So I think just being willing to share exactly what your trades are, what you're doing, let the pros help you. I think that is probably the single greatest thing that separates successful people from non-successful people with trading in general and with trading with our system.
You learn more from your mistakes than your successes.
That's very true.
So give it over to the pros, guys. Get onto the forum, post your trades there. Justin and some of the other pro traders will pick it apart for you. Right. Moving forward, can you walk us through exactly how you personally use the MPS when you're analyzing the market on a typical day?
Yeah, so we do a thing called the think tank, which is the time that I spend looking at the market. Generally, it takes really 5 to 10 minutes. I mean, really, to the lens that we look at the market through, it's pretty black and white. So I just get up, I do that. I use the software to just look at what coins are hot. Okay. I kind of put those on a watch list, so I kind of know what's good. And if it starts moving well, I'm going to want to trade it. But then also my life's made a lot easier by the software, because it'll, like, if there's something happening with a coin and I was not watching it, our software finds it. You know what I'm saying? And it might be a really great trade that I wasn't even thinking about. So that's how my days are. And then honestly, it's kind of ignoring the markets, right? Like, I don't go to bed thinking about crypto. I'm not thinking about it when I'm out. I'm not worrying about my portfolio. I'm not checking things. It's like all I do is, as soon as the signal comes on, then I'll go ahead and do something. But other than that, I just really don't think about it. So that's how my days are spent. Trying to ignore work until a really great trade comes my way, and then I go to work.
Do we have time for one or two more questions?
I think we can do one more question here.
All right. What's the biggest mistake that you see traders make, even when they're using the system, and how can they avoid it?
Oh, that is an easy one, and that's trying to take trades that aren't really in our pattern, and not being patient, right? So what's great about the software now is that our software kind of filters out trades right now, so that we're just kind of bringing you like the sweet spot, right? Once the coin really gets to the point where a great potential trade is going to happen. So now we have that. Early days, we didn't have that, Paul. You remember we used to have to flip through charts and everything. So there's a thing you'll know this if you do the free boot camp, which you can, again, email support@iCoinPRO.com, or get back with the person who introduced you to iCoinPRO, and they can get you this free boot camp. But you'll learn what's called Squeeze Bubble 1, 2, 3 money. And that is our dip trade. It is the gold-plated winner. It's the trade we love. Again, there's always risk with trading, but this trade we do extremely well with, okay? And the biggest thing I see is, a coin starts to do a dip, and it does the first dip, and people buy it. And we even say, and I've done this too, okay, as the creator of the system, it says in our training, don't ever buy the first dip, okay? Because that can dip harder. You need to let the pattern happen, dip 1, dip 2, dip 3. And it's that impatience, right, of not believing that the coin can go lower, that the full pattern can evolve. I think that's one of the biggest things. But after you do it once or twice, if you get by the wrong beginning of the dip sequence, oh man, it can be really, really painful. But if you just follow the system exactly as it's laid out, realize you're human, you're going to make mistakes, okay? But just follow the system. Try to trade like a robot. Don't try to force trades, okay? Just wait for the pattern to evolve. Once the pattern evolves, our win rate is insanely high on that trade, and you just have to let that happen. But that's honestly the biggest thing is traders want to trade, right? They want to get that feeling. They want to make that money. Patience pays. Just wait for the perfect trades. Don't touch anything that isn't. And you will be amazed at what you can do with your balance over a long period of time.
Awesome. Thank you so much, Mr. Justin Clark. I hope that you guys found that informative and educational, and getting a sneak peek into Justin's life and his brain. I do want to say, if you guys missed last week's or 2 weeks ago, 2 weeks ago.
2 weeks ago. Yeah,
Our podcast from 2 weeks ago, there we go, that's better English. Our podcast from 2 weeks ago is where I covered what was happening at the Vegas event, the Bitcoin 2025 Vegas event. If you haven't watched it, make sure you go and watch it. It was an awesome event. And hopefully, when another one comes up and it's in Vegas, I will see some of you guys there. Justin.
Awesome. Thank you, Paul. All right, everybody, take care. And we will look forward to seeing you on the next Crypto Edge podcast in about 2 weeks. Take care, everybody. Bye-bye now.